Welcome back. You're still with us on Startup Street. Fintech lending startup iFinance made a turnaround in the financial year that ended March 2023, rebounding from a loss in the previous year. This thanks to strong demand from loans from small and medium enterprises. The Gurugram-based company is backed by the likes of Elevation Capital, Capital G, Alpha Wave, Lightrock, A91 Partners and Mudge Invest. Joining me now to discuss the growth blueprint is Sanjay Sharma, the MD and CEO of iFinance. Sanjay, thank you so much for joining us on the show today. You're back to profitability. Talk to us about where your revenues are at. Are you on track to retain profitability? Where did you see the most demand and what led to the growth that you're currently seeing?
Thank you for having me on the channel. And yes, you're so very right that last year has been a bounce back year. I think the micro enterprises that we service saw a very difficult time during the COVID period. And that was the reason that we also had to slow down. But last year, we delivered a 56% growth and delivered a profit of 57 crores, which roughly translates to 3% return on asset post-tax. So those are wonderful numbers. And the good news is that this year has turned out to carry that momentum. We are disbursing close to 30,000 fresh loans every month. And that clearly tells you that there is a lot of demand from the micro enterprises, and obviously these are good times.
Right. So there is clear demand and it's good times for your company. What's the target for your loan book that you have for this year? What about NPAs? Your AUMs have also grown 56%. So where will the next leg of growth come from?
We see that there is a tremendous demand from the trading clusters. So traders are seeing growth. Manufacturing units are seeing growth. So even in the manufacturing sector, we are growing, and so is the service sector. So if I was to point at any specific industry, that would be difficult. But the growth is all around, and it's quite broad-based.
Right.
The growth will come from all these micro loans that we give to these micro enterprises. And the expectation is that we will again grow at about 55 to 60% annualized this year. So I think the momentum is only beginning to build in. The profitability also looks quite good in the initial months.
Right.
So I think this is going to be a wonderful year ahead.
So positive expectations there. Which of your products are you seeing the most traction for? Any new products you plan on launching?
We provide a variety of loans to micro businesses.
Right.
We have term loans. We also have a supply chain based lending. We're also trying out digital lending loans. So far, I think it's the term loans or working capital loans which are working the best. I think most of the businesses are looking for a 1.5 to 2 year sort of loan because they want to ramp up their business. They want to buy new working capital and get back to the volume that they used to see during COVID times or prior to COVID times.
All right. And what are the ticket sizes of these loans? Because they are micro loans. So what's the ticket size? What's the customer base like for you? And how do you plan to grow your customer base as well?
We have a active customer base of more than 350,000 micro enterprises. And the typical ticket size is between 1 lakh to 2 lakh. This translates to almost 50% of their working capital requirement in any particular month.
Right. Okay. And you currently, obviously, you have a Phygital model. Where are you seeing more traction? Will you grow your physical branches further? What's the target on that front? And where will the focus be, online or offline?
I think we will continue to stay on the Phygital model. While we have the ability to do digital, the customer will take probably a few more years to really get accustomed to digitally logging in and requesting a loan. So the answer to the question is that we will see a lot of sourcing through our branches. And we're seeing a lot of very good sourcing from the new branches that we've opened. Typically, East sector or Eastern region is a newer region.
Right.
And there we're seeing a lot of growth. We're seeing a lot of growth also in the North and in South and West. So as I said, it's very broad-based. It's not that one particular state is doing well or one region is doing well. We are in 22 states across India. And I must say that all states seem to be doing well.
All right, all states doing well for you. Now, the Reserve Bank of India has come out with a new FLDG framework, and many fintechs have raised concerns over the default cover for up to 5% of the loan portfolio under these guidelines. What's your view about it? What do you make of this framework and its impact?
I think from one perspective, FLDG guidelines are good because they will deepen the market and increase the lending to the financial world. We, as a company, have a gross NPA of about 2.5%. So a 5% FLDG that RBI allows is significantly above our loss rates. So I think for us, it really doesn't matter. We have been able to manage our loss rates within a very tight band.
Okay.
And I think that is the way every finance company obviously looks at their business. It's not just the FLDG percentage that is a guiding factor.
Right. All right, Sanjay, we're completely out of time, but thank you so much for joining us on the show, and we wish you all the best going forward.
Thank you, and all the best to you.